Welcome back to Squawk Box this morning. Oil contracts, they're coming off their 8th week of losses. That's in just 9 weeks. Joining us now for a look, though, at how to make some sense of the oil market's wild swings. Matt Smith is Director of Commodity Research at Clipper Data. Good morning to you, Matt. We're all trying to make sense of these numbers. We should probably show everybody where WTI crude stands just this morning. We say it almost every time we talk about oil. In a normal world, if you looked at prices like this, you'd think that equity markets would be falling. You'd think everything would be falling apart. And it doesn't feel like that's happening. Can you explain why?
Yeah, sure, Andrew. Well, if you look at what's happening in the July contracts, we're not seeing as big a volatility. We're seeing it actually looking higher this morning. And so what you've got, again, is this dislocation where you've got this front month coming under a lot of pressure. And the reason for that is simply because we're pushing on a string in terms of the demand side of the picture and the supply side. And so, we've got demand down at an unprecedented level here. Go on.
But even if you go out to July, the numbers are terrible. They're not as terrible as they are right now, but the economics of the whole complex doesn't work under any of these scenarios.
No, absolutely. So you look out to January contract for Brent and you're still at $31 there. And that is simply a reflection that we have too much supply in the market and the expectation that there's going to be oversupply through the end of this year. And so what you've got really is a situation, you're not only seeing onshore storage coming under threat, we've got the EIA weekly report tomorrow. We get a decent build, we're going to get record inventories there, but we're also seeing offshore stress as well. So we're seeing global inventories on a floating basis at like 140 million barrels. We're seeing it across commodities as well. We're seeing it in unusual areas too. So you're seeing it building up off the US West Coast. You're seeing gasoline building up off of Mexico simply because there's a lockdown there and they're not consuming it. And so there is just this stress across the world, and we're just going to see prices continuing to come under pressure here until enough production comes offline to try and get closer to balance.
What is the signal to buy, or is the signal to buy now, given the blood on the street?
I don't think so. I think that's possibly what you can see in terms of the equities. We just had BP come out with their results. They're slashing costs here. They're cutting really that profitability. They're targeting sort of $35 a barrel in terms of profitability. And so really, I think there's more blood on the streets to come yet. So probably not yet from a commodity perspective, but perhaps from an equity side, yeah.